Of course, it is important to determine potential reaction levels on the higher time frames, because if the market really starts to move on any given day, you will want to know at what price levels distinct reaction levels exist, because of course we can anticipate a bounce there, and it gives us more time to plan the scalping trade. Therefore, predetermine reaction levels on higher time frames, because if the market has a trending or large ranging day, you will need to know these levels to anticipate a bounce. So, taking this British pound 4-hour chart as an example, now price levels on the 4-hour chart, of course, the higher the time frame, the more profound the price level, and typically the larger response we will get out of that price level. However, the market may not bounce on as exact a price as it would on smaller time frames. Taking this 4-hour time frame as an example, you see here how we have these range highs across this. You see this high to this low, price is retraced to 38%, and we see range highs right there at the 38% retracement level, and we've actually already seen a couple of reactions off of that price level. Likewise, these lows here have also seen some volatility in between these two levels. So price is currently ranging at this level. So what you want to do is, price is currently here, and you want to establish where your potential reaction levels are in the future. Well, what I would take from here is I would take this low right here, and if price decided to go and bounce off these lows and penetrate it, then I would want to look at the next low, which is here. And looking further down, on this down price swing, we have 127% extension and a 79% retracement from the last upswing at 9,500, the figure. So a very good area where we could see a reaction level. On the upside, there's a 50% retracement level here where you might see a minor reaction between the 50% retracement and this low right here, or between the 50% and these highs, which is between the 58 and the 32. The next level up would be the 62 retracement, where you might see a reaction. Then, of course, the high just below 9,700, and then the 79 retracement, and then these highs over here. And what you would do is you would mark these levels, and you would make note of the number. And if price starts moving out of this range, then you're going to need to acknowledge these numbers and anticipate a potential bounce here. You can see here, for example, this 50% retracement converges at the lows of these two. This is an 8-hour period right here, and we converge right at that level. You see the bodies? You see how these bodies here are separated from these bodies? Well, the 50% retracement line runs right through the highs of those bodies and the lows of those. Therefore, would make it a resistance and support level if you were to zoom in on a smaller time frame. Looking at this daily chart, currently price is here at 95.91. Therefore, what you would do is you look at these lows. We have a double bottom low here, and then below that we have a 38% retracement level from this upswing, although it's already been penetrated once. You would also want to look at the low of this candle and the low of this candle. On the upside, you'd want to look at the highs of each of these daily highs. Okay? Current daily high, previous day's high, and previous day's high, and then continue at the day's highs preceding those. And simply mark them off and watch. If price starts trending aggressively, then you want to look at these levels. And again, a lot of these levels will also correspond with levels on the 4-hour chart as well. Some scalp entry considerations. Just again as a reminder, as price is falling, prepare to buy at a key level where you will anticipate a bounce of at least 10 pips. Have your order window prepared and watch price closely, and have your finger on the trigger for when price moves towards that level. Use as tight a stop as possible or as reasonable. Give the market a little bit of room to breathe at first, and then once your order gets taken in, then you may want to start moving your stop up if the price responds favorably. The risk-reward ratio is typically not great when scalping, so there is a higher risk per reward ratio. Move your stop to break even as soon as possible, or as close to break even as soon as possible. Some general rules. Again, enter on a bold-faced candle moving in the opposite direction to your desired trade. When entering the trade, give price room to breathe a little bit with a slightly wider stop at the start. If or when it starts to move in your direction, then pull the stop closer. Do not let the market go 10 pips without taking something out of the trade. Either take all of it out or some of it out, because the market may continue to move, but at least take something out of 10 pips and do what's called fund your position. Pay for the stop and even take a little bit over and above where your current stop is or what your current risk is, so you have some profit if the market is to move against your direction from that time.